Let me check if Jennifer Blanke, non-executive director at the African Risk Capacity, is hearing you right now. We are also going. Oh, hi, Jennifer. We are going also to be joined by Natalia Diaz, the CEO of the Standard Bank Brazil. I'm seeing Natalia right now. Also, Grazielle Parenti. Hello, hello, Natalia. We also have Grazielle Parenti, who is the Global VP Corporate Affairs and Sustainability at BRF. Grazielle, do you hear me? Perfect, thank you very much. And also Leisa de Souza, who is the head for Latin America at the Climate Bonds Initiative. I'm very pleased to be here today because you are an inspiration. I have been following your work, so thank you very much for joining us today. ESG, we have these three letters, environmental, social, and governance. So I know that this has been in the mainstream agenda of the road right now. Has a group of standards for companies try to guide new investments to do. So must have been said about how ESG has driven economic development and the use of natural resources globally. This is the general thought. But I would like to start warming up with Jennifer Blanke, taking your point of view on this, Jennifer, because we have exchanged a little brief on this. So I think it's going to be a very point for us to start our panel right now.
Thanks, Caroline, and hello to the wonderful all-women panel. Delighted to be here today, and thank you for the invitation to speak again at this exciting forum. So Caroline, you know that I'm going to be a little bit controversial and say, with all positivity, that ESG is actually not yet the driving force in economic development and the use of natural resources. And still today, economic growth brings with it way too much bad with the good in terms of inequality, environmental damage, in terms of climate change, et cetera. However, and that's why we're here today, ESG is helping to move things in the right direction, and it is an important force. Businesses are facing lots of pressures, not just from investors. They're facing pressures from consumers and employees who care about where they work, who care about who they buy from. And ESG is important because, the role of investors is helpful in pushing things much more quickly in the direction, I think, of a greener and more just economy, transition that we need. And you sort of mentioned this, Caroline, but what it has done is it's put a language around what we want to do and a set of expectations, not yet agreed standards. We're getting there. And that's one of the important things I think we still need to do, and really is helping for us to start doing things differently. And just a few things for those who maybe, are somewhat new to the concept of ESG. There's been big institutional investors that are saying they're going to put ESG at the core of their investment strategy. And BlackRock is, the most famous example. It's a huge, huge company. And so when BlackRock talks, people listen. And, this can really move things, but also pension funds, sovereign wealth funds that are backed up, often by governments, but not always, that are helping to diversify away from fossil fuel. Even the Norwegian sovereign wealth fund, which is kind of ironic. But last month, you might have seen that the Dutch pension fund ABP also said it would be selling some of its Shell stock, basically to divest from fossil fuels. So, that's a bit of a wake-up call. Also, investment fund activism, again, around ESG. Third Point and engine number one have gotten a lot of attention, again, in the energy space, pushing Shell and Exxon to move more quickly towards renewables. Also, there were lots of commitments. We've just come out of COP26, where investors are saying they're going to push to net zero. So all of this is really good. It is helping move in the right direction, but a lot still remains to be achieved. We do still need comparable and agreed measurements. Again, there were some agreements to work towards this at COP, but we're not there yet, and it can be quite confusing for people, actually. We need the right kind of regulation, obviously. Businesses and investors are not going to do this on their own. And ultimately, and this is a pet peeve of mine that hopefully we can come back to later, we need the right kinds of companies that are helping rather than hurting in the transition. So I hope that we'll have a chance to discuss more in detail, and Thanks a lot, Caroline. Back to you.
Sure, Jennifer. Thanks for launching the discussion for us. So I would come to Natalia because being the CEO of the Standard Bank in Brazil, Natalia, I know that you are involved with much of what Jennifer has just talked about. But for you, what's the role of financial institutions and investors promoting the ESG agenda?
Thanks, Caroline. And well, thanks, Professor John Bosco and the entire Brazil and Africa Forum team for inviting me. Again, it's a pleasure to be in our all-women panel as well. And also to discuss such an important aspect, which are the ESG aspects that that are on the top of the agenda for many countries and corporates. So I couldn't agree more with Jennifer in the sense that ESG is not the driving force yet, but for most of the companies, I mean, it is the future. And any company or financial institutions that are not taking decisions or are not shaping their strategy, taking into consideration ESG factors, they will not be part of the game in the medium term. And the reason that we are saying that is because there is not only the pressure from the different stakeholders, as Jennifer mentioned, but it is sort of the climate emergency is so important, and it's changing the prices of assets. It's changing the way we are looking into the business, that there is no way that we cannot kind of develop or take a different look into those aspects. And I think that the financial sector has a very important role to play in helping actually us to expedite or accelerate the energy transition by just in two different ways. First of all, it's either providing incentives for the financing of green or sustainable projects on one hand, and the other, of course, I mean, passing on different policies that will prevent us from sort of financing the old type of projects or the not sustainable projects, right? And I think this is not an easy task, of course, I mean, because we have to take into consideration many aspects, and the one is really most important one is to ensure a fair transition for the different countries and the different corporates, right? And so I think that the best way to think about that is really all the investment decisions that we have taken up until right now, they were prioritizing the risk and the return equation, and to a certain extent, the liquidity, right? How much liquidity we would like to keep. And I think that for us to be in a position to ensure that transition and ensure that we are changing the society, we have to take into consideration another aspect, which is the impact. How the financing or the resources that we are applying to any specific project or corporate is actually impacting not only the environment, but the social and the governance, which are equally important aspects of the ESG aspect. And just a few numbers for us just to set the tone of the panel. If you take into consideration the 2030 agenda from the United Nations, there is an estimate that we will need, there is a financing gap of $3.5 trillion to finance this transition. And if we take only the climate portion of the Sustainable Development Goals, we should be investing 1% of the global GDP to ensure a proper transition. And actually the number right now is probably closer to 0.1%. On the other hand, if we look in terms of the pockets of wealth, there is approximately $350 trillion in assets in liquidity that can be applied to financing that, out of which 270 is in the hands of the private sector. So I think that it's really not that we don't have the resources, but we need to change the mindset on how we allocate resources and how we want, what is the role that really we need to leave for the next generations. And I think that the SDGs, they brought not only a common language to which ESG is really kind of the mechanism of how to apply or to connect to the ESG, but it is also gave us the opportunity to rethink the way we do, we finance projects, the way we set up the strategy. And I think that any company or financial institution trying to be or to continue to be a going concern in the future should take those aspects into consideration.
Very nice intervention, Natalia. So you have mentioned on how to invest, on how to create impact, but let me try to address where to create this impact, where to invest. I'll come to Leisa right now because being involved in the scenario of the Latin America and Caribbean and also Brazil, we have Europe, for example, North America and also Asia really pushing the ESG agenda, Leisa. But how do you evaluate the situation right now in the Latin America and Caribbean regions and also in Brazil as well? Because it may seem that the region is becoming a little behind of all the efforts we are seeing globally right now.
Oh, perfect. Thank you so much. It's a pleasure to be here. It's my first time in the forum, and I think my first time in an all-women panel. It's a pleasure.
This is my first too. So
usually, especially working with agriculture and finance, it is all always hard to have all-women panels. So it's fantastic to be here with such big names and such specialists bringing all this information to you. So I think also in bringing more recently, we've seen, of course, this ESG surge in the world and in Latin America. And I think just to connect back to what Jennifer and Natalie have also mentioned in terms of course, this ESG agenda is important because, of course, you're talking about risk, financial return, and, of course, long-term performance as well. So thinking, of course, from both the investor and issuer side. So, of course, looking at Latin America, it's not as a mature market in terms of the world as you mentioned, Caroline, because we have, of course, investors, as Jennifer already mentioned, internationally, that do want to invest, of course, in these sustainable assets and projects. But the good news is that if we look at Brazil, we're the largest market in Latin America. If we look at sustainable finance, especially green bonds, that's what CBI does. And I think this is really important in terms of, even the political context and so on. And I think the role of the private sector, because these issuances are being driven by corporates and, of course, non-financial institutions, and even bringing this a bit to Africa as well. And Climate Bond is a global organization, and we monitor the market and how it's developing worldwide. So in Africa, of course, if we look as well at the issuer profile, we look at especially at financial institutions representing 47% of green bond issuance in the country. So I think it really talks to the role. Agreeing with Jennifer, we're not there yet in terms of course, being the driving force, but of course, the private sector has a fundamental role in pushing, and also, being at the panel, we have the first green bond issuance in Brazil with BRF. So I think looking at the diversification that we've seen so far as well in terms of sectors. So worldwide and in Brazil, we see energy as a main point. So I think thinking about, of course, natural resources, there's still a long way to go. And I think even in the previous panel of the opportunities that we have in Brazil, in Latin America, and of course, Africa, in terms of, infrastructure gaps and sustainable agriculture, there's still a long way to go because we've been focusing still a lot on energy. And we know that we need to transition in several sectors of the economy. No sector can be left behind. So I think there's still an important piece of work that we need to develop in terms of, driving a change and also driving this investment. But the good thing is that we've been seeing issuances doubling in the region so far since 2019. So in Latin America, 30.2 billion of green bonds, and in Brazil, 10.3.
Thank you, Leisa. So I'll keep this regional right now because we are going to stick in Brazil talking with Grazielle right now because Grazielle, your position at BRF has specifically focusing on sustainability that has been created, if I'm aware correctly, just this year. And you have been advocating that Brazil has a huge opportunity right now with ESG. So how do you evaluate right now Brazilian response to the ESG agenda? What we have seen right now, for example, in the energy sector, as Leisa just mentioned?
Okay, so normally we say hello, guys, but here I'm glad to say hello, girls. So first of all, thank you so much for the invitation and to have this discussion about such an important topic that is not just a nice to have, but it's a must have. And we in BRF, we believe that ESG has become not something that you choose to do, but something that is a license to operate. It's not just for Brazil, it's not for the agribusiness sector only, it's for everyone.
And who doesn't understand that will not be in the business successfully in the years to come. So I think this is my first statement on this. The second thing is that BRF is a global company. So we do have footprints across the world as the largest poultry exporter in the world. And we see that this conversation and the business are heading to that. So we announced this year our net zero commitment to 2040. And this tells a lot because BRF is the largest grains buyer in Brazil. So when a company like us do a commitment related to that, you push all the value chain. So from the farm to the fork, from the bringing the farmers, the traders, the feed, we produce the feed, but also the what we call the integrados in Portuguese. That means that there are small farmers that help us with the growth of the animals. And then later on, the distribution, the exports, and even the consumer. So this is one thing that is important to have in consideration. And why we are doing this, and then coming to your question about this position, is because we understand that this is critical for our business. So it's important to have sustainability on the board, on the C-level of the organization, to have our vision, our business vision 2030 is absolutely sustainability embedded. There is no discussion, there is no market access if you don't talk about it. And it's just not something for the Northern Hemisphere. This is happening everywhere. I just came a few weeks ago from the COP in Glasgow, and I had the chance, of course, to connect with African leaders there. The best practice that we are developing in Brazil about the water usage. We faced a couple of years ago a severe drought, and how, and this is of course is critical for all citizens, but it's critical for a business that is connected to the farms. So there is a lot that we can share in practice about the usage of natural resources, water, energy. Brazil has a very renewable energy matrix, but the other ones like solar and windy have been developing faster. So nowadays, windy accounts for almost 11% of the Brazilian as a country energy matrix. And BRF took a commitment last year to have at least 50% of our own consumption, being self-generated by solar and wind. And we have signed partnerships that from this year that till 2024, we're gonna have 88% of our total consumption coming from solar and wind. And this is something that is quite easy to replicate. Africa has a very privileged also geography and location for that. We have a strong footprint in the Middle East, for instance. We are doing this in our plants, our factories in Abu Dhabi, in the Emirates. So how we develop this in Turkey, that is also a big market for us. So how we can bring, our products, of course, our business, but also how can we bring good practice on this and also learn from the others. But we normally, when we talk about ESG, we talk more about the E, but just not remember that who will be doing everything is the S. The people that we have, the communities, our employees, our colleagues, the investors. So there is an S, and we share with Africa some common challenges related to that. So who will be going to do the transition for a ESG world is the private sector for sure.
Yes, you're talking about this important perspective from the private sector side, but we know that we have also social entrepreneurship, and I know that Jennifer is really close to this kind of approach right now. So Jennifer, if you could evaluate for us right now what social entrepreneurship represents right now in terms of pushing the ESG agenda.
So, look, I think if you think about a just and sustainable transition, you have to think about two things. First of all, you need to transition the existing companies like we were talking about, but you also have to think about what sorts of companies are being created, what kinds of enterprise. And especially in Africa, but also in Brazil. But Brazil's a more, I mean, you can't say Africa because there's big differences across African countries, but on average, you might have lower income countries. And, Brazil is a middle income country, which is a little different, and it's more sort of set, right? So when I look at Africa, I get really excited. Also, if you think about a region that has a median age of about 19, it's incredibly young, right? Which is an opportunity as well as a threat if you don't deal with it correctly. So I often think that Africa has sort of a second mover advantage on this stuff because they have they don't have to break everything to fix it. They just need to fix it from the get-go. So I look at all these incredible young African people who I used to meet whenever I was traveling around Africa, and they are an army of social entrepreneurs in the making, really. They have amazing ideas, and frankly, they need to create their own jobs because there aren't a huge amount of good formal jobs. And at the same time, sort of the goods and services that we expect in many places. In many parts of Africa, those don't exist yet. But they can do it really in a sustainable and in a social way from the get-go. And they have incredible ideas about whether it's sustainable agriculture or, inclusive construction, and so on and so on. And I like that Grazielle talked about the S, because everybody talks about the E. And I guess coming out of COP26, it's normal that we talk a lot about the E, but, this is all about people at the end of the day. And so, I guess that's why when I get very excited about social entrepreneurship and the potential, and let's not forget, in Brazil, it's also a huge opportunity. When we think about creative destruction, when we think about the natural churn that's going on in an economy, let's make it easier to create these sorts of enterprises, because the last word on this is it's really hard. Go talk to any social entrepreneur. They can't figure out what kind of business, kind of set up to create. They don't understand exactly what their reporting requirements are or, their tax, rules. And so we need to kind of almost lay this out like another lane in the highway, kind of NGOs know what they need, businesses need what they need. These are guys who actually earn their own revenue, but they're providing a social service so the government and NGOs don't have to do it. Let's make it easier for them. And governments have a huge role to play in this in terms of regulation, setting all the right standards. So thank you, Caroline, for letting me make that plea, because I think let's not forget, investment's going to be hugely important across the board, and let's be transitioning into the right kinds of companies.
Social entrepreneurship is in the origins of the human being, so it makes all the sense. So, Leisa, from your point of view, how to identify, for example, an ESG investment, how to approach, for example, a new initiative, how to push this, identifying what can be boosted by the ESG agenda?
Fantastic. So this is very much at the core of what the climate bond is doing. But as Jennifer put, we've been focusing a lot on the environment, and sometimes we do separate different things. But if you think about green, of course, you have to think about governance because you're talking about disclosure, you're talking about compliance, you're talking about standards and ethical businesses or the right companies or the right business. So, and then also on the social side, I think you can't really, if we think about impact, where it all goes. So CBI, we focus a lot on green. We've created a taxonomy with taxonomy, and we see a different movement or a taxomania on different taxonomies being created all over the world. So in Latin America, we have Colombia, we have Mexico, Chile already is also starting to begin. We have the EU sustainable taxonomy. So all these different tools, they help investors and issuers on identifying, especially on the environmental side, where should I begin, where to start? And of course, there's energy, there's buildings, there's infrastructure, agriculture, forest conservation, and a wide range of sectors. And the taxonomy helps because if you look at the taxonomy, it doesn't include mining, it doesn't include coal, but this doesn't mean we're not looking at these sectors and that we don't have to transition in these sectors. That's why the Climate Bond also launched a transition program looking also at entity level, so we can support companies as well in this transition towards net zero. So I think the transition label is also going to be increasingly important to push the ESG agenda. And in terms of sustainability and social side, I think we still don't have the very clear metrics, as Jennifer also put. And I think, of course, this is not only to the market to decide, but the market begins and it tests. And in terms of international practices and standards, we have the ICMA, principles for social bonds. So it's a good way to look at, where can I fit? And this, of course, are wide areas, but it's a place to begin where you're looking at access to basic infrastructure, employment, gender. So I think, the market has set a few standards and metrics that can support directing issuers and investors on where to begin.
Thank you, Leisa. So to support all of this, we know that you have to know, for example, why is the reason of the investment, how to act, where the investment is focused on. And this is one of the things that I was reading just a few minutes before the panel start, a report of the World Economic Forum saying that collecting data, real important information to based all these actions is one of the problems that ESG faces right now. So just 9% of the companies that answered this survey of the World Economic Forum are actively using software to support, for example, the data collecting of this. So I would like to address Grazielle right now because from your experience being in the private sector, so what kind of data, what kind of information do you think it's really important to base your politics to let you know what step you should move right now?
Good. Well, there is. We live nowadays in the era and the times of the hyper transparency. So, in the case of a company like us that we are listed in stock exchange in Brazil and in US, it means that we have to comply with all disclosure that is necessary for that. So we, just to give you an example, we received a lot of requests of investors or of banks and everything else to go a little bit to dig in, to have more about what we are doing. So we have all the public information on our media, but it's always good to see the interest of some of them, reaching out to us directly to go deeper on that. So I would like to understand more about your deforestation policy. I would like to understand more about human rights. I'd like to understand more about corruption and things like that. So it's interesting that there are people on these banks that are negotiating the interest rates. There are other people, but there are teams inside these groups of investors that are looking for sustainability in a very deep way, so really with a deep knowledge about what we are talking. So I think this is the first thing. The second thing is there is many market instruments, as I say, market analysis, marketing awards. So one thing that from the private sector point of view is that we should have a more standardized approach to that. Otherwise, I have to have a lot of people just, giving information and filling reports and everything else. So the more we can, because for instance, EBITDA is EBITDA everywhere in the world, but how we have common standards that we can really compare things. So this is a challenge, but I know that this is something that have been discussing, people are advancing on that, and we expect to have this that we can really compare. The other thing that we do value is, and then it's a pillar of our sustainability strategy here, is communication. Because it's important that we communicate not just with the technical guys, but how we engage our employees, how we engage our consumers, how we engage the public policy guys. So I think that is a strong piece of the ESG agenda, that is communication. Quite often we forget that. And also, the other pillar for me is the public policy, how the NGOs and private sector can work together with the policymakers to have incentives or at least guidelines for us to advance faster. Because after the COP, the conference, the governments have made a lot of commitments, but who will be doing the commitments? Who will be executing that? That's us, all of us that are here. So it's there is a lot to come on that. Thank you.
Natalia, looking for this relationship, this connection that Grazielle just mentioned, how these connections towards ESG can determine in a short and medium term the resource allocation at this moment?
So this is an interesting question, and I think that we have to look at that from the corporate side and also from the financial market side. So I think On the financial markets, the key trends that we are seeing, first of all, is for insurance company, because actually climate risk and ESG risk is actually can escalate and become a systemic risk. So we are seeing a huge increase in insurance premium pricing, for instance, that will determine the viability or the feasibility of several projects around the world. On the other hand, I mean, as Jennifer mentioned in the beginning, there has been lots of investor activism, with some investors actually dedicating specific funding to finance the transition. So I think that we will be seeing more and more different pockets of liquidities for companies that actually are committed to the ESG agenda compared to the ones that are not, right? And then thirdly, I think that there is a huge opportunity for not only commercial banks like Standard Bank, but also DFIs, development financial institutions, to actually partner together in blended finance structures, whereby we will be helping to finance this new environment. And this blended structure is whereby you have either philanthropic funds or public funds coming from DFIs, actually trying to crowd in or to deleverage the risks of the projects and trying to crowd in the investment from the private sector, being the commercial banks. So that's another avenue. From the corporate side, I think that the major things to keep into consideration is that we cannot avoid or this discussion on climate and the social and the impact that any investment from a corporate side will have on society, right? Because we are seeing in Europe, for instance, more activism from the consumers that are not buying products from companies that are not engaged in that. This is not a reality in Brazil and Africa yet, but I think that we will be moving to that direction. So how companies will factor in these teams into their investment decisions, and we cannot downplay, I think, that the risk that regulatory changes will completely change the way we, or the profitability of some of the investments. So there is a huge debate on how we will finance the transition, if we are going to impose a carbon tax, what is the size of the carbon tax that is needed to ensure a proper and a just transition. I think that there is an estimate that we should be taxing carbon at $75 per ton, and we are now actually charging $3. And there might be increasing regulatory impositions from governments that are trying to force entire systems or sectors to move into the right direction. And this has to be factoring by any corporates before they take a decision to invest in a new product line, in a new product or service, or to change existing product lines that will not be competitive in this new environment where we take all these variables into consideration.
Thank you, Natalia. I really would like to follow right now, since I was just warned that we are in the last 10 minutes of our amazing panel. I would like to try to connect a little bit ESG and the SDGs. So I would come to Jennifer right now, Jennifer, because and also Jennifer, because you have this expertise working also with the fourth sector. So my first point would be, how is ESG connected to the fourth sector right now? How both agendas can follow together at this moment?
So, I mean, first of all, if you talk SDG and ESG, because there's so many acronyms out there, I mean, the whole point of ESG is the SDGs, right? That's just to start. You know, the whole point of environmental, social, and governance is that we do the right thing with the funds that we have. So that's kind of the piping of the economy, right? The finance. The SDG is what we want to do, right? Because we see that we're sort of destroying people and planet as we grow. And by the way, I mean, if you take a historical perspective and you sort of look at, the world didn't grow for most of humanity, right? I mean, GDP per capita was like 0. You know, it was like there were a couple of rich people and most people. And then suddenly at the Industrial Revolution, it took off. But lo and behold, as that took off, so did all of these other problems, right? We started putting all kinds of terrible stuff into the atmosphere. We started seeing in a lot of places rising inequality and many, many other social and environmental ills, pollution, et cetera. And so if you think about the fourth sector, which, you know, sort of what most people think of as social or environmental enterprise, the whole point is that, you know, we want revenue, you know, revenue the government is only spending money that comes from the private sector. NGOs are only spending money that comes from the private sector. Somebody has to produce the revenue, but there's a way to do it in a different way, right? And so if you can invest in those companies that are saying, we're going to provide goods and services, we're going to earn our own revenue, we're not asking you for anything, but we'll do it in a different way, but maybe make it a little easier for us. That's a way to deliver on the SDGs as well, so, but you can't suddenly, do away with everything that exists and have all of the new ones. You need to have a transition. It's almost like you bring this in parallel with the rest of it, because the whole point of fourth sector is the SDGs. The whole point of a lot of what companies are trying to do is the SDGs. And I mean, a lot of what Grazielle as well is talking about. I mean, obviously, when you hear about what Leisa is talking about, that's really about crowding more money in. But when you run a poultry company in a way that thinks about all the people in the value chain, that thinks about, how you're processing, that thinks about, kind of where this is going afterwards and packaging, that is exactly the sort of economy that we want to get to. And so I think we need to have this multi-pronged approach. There's not one silver bullet. I really wish there were, but everybody has to be marching in the same direction. And I think everything that we're talking about is a way to make all of the choices that we have in our lives every day as consumers, as employees, as investors, as, anybody just kind of waking up and trying to do what they have to do as a member of society, that it makes the choices easy, and it makes us all sort of do the right thing together. So whether it's ESG, whether it's, social enterprise, I think we're going to get there. And I believe that. I'm an eternal optimist, but I believe it because, first of all, you have all these sorts of incredible people like we hear on the panel today talking about the hard work that they're doing, but also because our planet depends on it and our people depend on it.
So I would come to Leisa right now. Leisa, so from your perspective, what can be the best practices that both the private sector and governments can actually adopt right now to promote environmental sustainability?
So even when we were talking about transition and we launched a report on, what we mean by transition, and as Graziella mentioned, with COP, there are a lot of pledges, but we need to see these actually become action, right? So all the commitments from private sector and from governments, they have to have, a clear strategy, interim targets. So, I mean, of course, this is very broad, and I think, we do have to recognize the little things that are happening in terms of, here in Brazil, fast tracking, renewable and infrastructure projects in terms of, being able to label bonds, seeing, not only bonds, but to different loans and even other instruments that have come into market as, SLBs. But I think the main thing here, and I think very in line with what Jennifer is saying, is that there is a role for government, there is a role for the private sector, and it's really implementing and making, all these pledges become actions. And I think there's a lot of material, and even, what Grazielle mentioned, I think the SDGs, and even when we talk about green bonds or social bonds, or just, the all these thematic labels that come and increase, and we're going to start seeing climate resilience bonds, especially thinking about Africa and even Caribbean countries, and, how you address the challenges that climate brings to these nations, is really, there, the guidance is there, but, how you actually start incorporating this and having a shift in culture. So there is definitely, I think, a role for each and every one of us in terms of action, and, where to begin. I think the roadmap is there, and I think it's really on, committing to deliver this.
So, Natalia, even though with a few issues yet to solve, but does ESG represent at this moment an opportunity rather than a risk?
Yeah, I think so. I think that there has been an evolution of the concept, and I think that it really depends on the player and the way you see it. But I think that in a nutshell, in the beginning, I mean, many of the companies or the corporates, they were seeing actually ESG as a burden, how much they were going to increase costs to adapt to this new reality. I think that there are other players that see this as a risk mitigation tool. So how can I kind of try to build up a risk matrix and try to incorporate those issues around that? But we are seeing more and more corporates and startups seeing ESG as an opportunity. And there is a study that points out that there actually has a $12 trillion opportunity if we fulfill the 2030 agenda of the United Nations. And there has been a potential to create another 380 million jobs if we are successful in delivering that agenda. So I think that basically what we can say is that there are many companies that are looking at ESG to try to innovate and to create new technologies that will enable that transition. And I think that Brazil has played an important role. For instance, we can take the example of the biofuels that we have. It's a super big industry here in Brazil that has many successes along the value chain, not only because this was a very successful partnership between the public sector that has sort of put in place some policies to actually foster that industry, and also has made some financing available for the development of the technology in early stages, to all the whole system that we have created. We are now producing sugar, ethanol. We have this whole national industry around the flex fuel cars, and this can be a solution to be implemented in other geographies in the world. So I think that is really the way you look at the equation. Of course, I mean, there are costs associated, and we will not see a faster transition or a faster adaptation to ESG if we are not in a position to actually make technology cheaper. And so there is huge investment that will be necessary to actually turn this transition into a fair one. But I think that there are very good prospects, and many companies actually looking at. I think ESG can be a competitive advantage rather than a risk, depending on how you look and you incorporate those values into your corporate strategy and fulfilling of your purpose as a company.
Thank you, Natalia. So, Grazielle, you are going to wrap up right now on behalf of all the speakers here. So, what would be your advice at this moment? What's missing for the ESG really driven the path towards sustainable development, economic development, since we have talked a lot here about the challenge to overcome right now?
Well, in my understanding, there is not like a cake recipe for everything, but I do think there is a roadmap, and the roadmap starts, in my opinion, from the leadership. So setting the tone in the private sector from the leadership is critical on that. And later on, hey, the next steps for me would be, having a clear strategy that is totally integrated with the business. As Natalia just mentioned, this has to be as a business advantage. So you can premiumize your products or your services or whatever. So for me, there is a lot about leadership. There is also a lot about communication, engaging the others in the value chain. But also we have to, close this financial role here. That is, if you go, for instance, for the energy piece, you have to address the operational issue that we have. You have to address the financial risk issue about investing in energy, but also you are addressing sustainability. So the more that we can have initiatives that can close these three gaps, operation, finance, and then you offset sustainability, then you're gonna move faster, in each and everything. And I also would like to reinforce about the development goals is about, we are just coming back from a pandemic time. So there is a lot to do about recovering economy, recovering jobs and all that. I think also that in the case of BRF, we do have in our institute, we've found an ecosystem of social impact. And as being a food company, our cause is food waste. And food waste has a lot to do with sustainability, because we see people, we still we still face hunger in many parts of the world, and after the pandemic even more. But when you produce some food that is going to become waste, it means that you are wasting energy, you are wasting the land, you are wasting everything. And it's also becoming garbage, and then you're gonna have methane emission and everything else. So there is an important issue to tackle that, in our point of view, that is the food waste. But just to summarize here, there is the next 20 years. In the case of Brazil, like 40 years ago, we were a food importer. Nowadays, Brazil is one of the largest food exporters. Who will be Brazil in the next 20 years? The country that will be producing food for the domestic market and international market with a premium for being a sustainable production. And this is not just something that Brazil can do. Africa also shares a common geography with Brazil. This is not impossible. It's just require a lot of focus and, of course, investment. But that's why we have so many amazing women here from the investment side, you know?
Yes, for sure, Grazielle. So all agreed with this, Leisa, Natalia, Jennifer. So this was a good advice, a good recipe from Grazielle for us to follow right now. Any final comments from Jennifer?
No, I mean, I completely agree, and I'm really excited about this concept. The next 20 years, who will be the sustainability leaders and inclusiveness leaders? I think that Brazil and African countries have a good chance to be up there in the running, and so let's make it happen.
Perfect. Leisa?
Very inspired by what Graziella said, and I think we see the potential and everything in terms of Brazil's sustainable agriculture, and so many things. So I think we're in the right path already in terms of the issuances, and I think there's a lot that we can, because we always think about learning from others, but I think Brazil can definitely teach others on what to do in terms of sustainability, especially in agriculture. So very excited to see what will come in the next 20 years.
And Natalia, just to close.
No, and for me, well, I agree with all the comments. And I think that what we need to bear in mind, some of the topics that were mentioned here, I mean, we are talking about a lot of the climate change and etc. But for regions like Brazil and Africa, where there's huge inequality, here in Brazil, 1% of the population, they concentrate 49% of all the wealth. I think that we should be taking a closer look into the social aspect of that, as Grazielle has mentioned very, very well in her speech. So this is another point. And the other one, perhaps for us not to lose sight, is that in most of the developing markets, I mean, small and medium-sized enterprises, they form the bulk of the economy. So I'm not surprised that the large corporates will do whatever they can to ensure the proper transition, but how we can sort of crowd in smaller and medium-sized companies and actually make this something that it's more, it's bigger than exactly and reflects the size of the economy. So I think we are in the early stages of the journey. I'm excited because I see ESG as an opportunity, but again, it will require a lot of effort, not only from the private sector, the governments, and the large corporates with small corporates, and we thinking about climate, social, and governance to actually make a huge impact to the entire society.
Thank you. Thank you very much, Natalia. I cannot say how honored I am for being the moderator of this panel. I learned a lot. So thank you very much for joining us today. To all of you, it was a pleasure to be here, and I hope to stay connected with you in some way. Thank you very much. It was my pleasure. Bye-bye.